Obviously, many of us stayed up over the weekends and stayed up last night to quite an interesting market situation. A lot of drama, as you can kind of see it here behind me. I've got my screen over here. Everything's in the red. I've got the screen on the other side, which I'm watching the S&P, and the S&P opened, and for a good bit of time, looked like it was going to start to recover some of the gap between today's open and Friday's close, but that changed, right? That changed after about the first half hour. Typically what I look at is I look at the first hour of the day when the markets are very volatile, when we get a big up move in volatility. I'll take a look at that first hour, and then it's what happens after that first hour that gives us ideas for momentum, all right? Now, I'm not a day trader. I don't plan on getting into day trading with you, but I'm trying to set the tone for those days when technicals just don't make sense, when fundamentals don't make sense, when it's all news-based information, okay? Because yes, I do look at what happens for the day, but we got to step back from this, and I want to talk about how we step back. So you got markets that are lower today, all right? We got the treasuries up, we got the dollar up, we got crude up, gas up, natural gas is up 8% off this morning. Gold's kind of was a mixed bag, came in lower, it's gotten a little bit higher. Cryptos were down hard. Take a look at this one chart. This is the chart that really, I think, spooked crypto traders, and that was Ethereum. So on Friday, Ethereum was trading at $3,400. Right, dropped down to 3,200 by Friday night. And then, of course, into Saturday and Sunday, we just saw this big drop off from the low 3,000s down to the low 2,000s. We dropped 1,250 points, right, in a matter of 2 days, from the beginning of one day, day zero, to the end of day two. That's about 1/3 of the value was erased from Ethereum. And so, you look at that and you compare it to Bitcoin. Bitcoin didn't take anywhere near that kind of a drop. But again, Ethereum was also the alpha on the way up recently too. So, what goes up hard can also go down hard. And so, we have to look at that as an entire factor of what's going on here. So I want to talk a little bit about the tariffs. And I want to talk about, first of all, what cause and effects are on tariffs. I want to talk a little bit about looking at the difference between 2018 and 2025. What stocks outperform in 2025 or 2018, and then what I'm seeing as the best stocks in light of an extended tariff. All right. So, what is a tariff? Real quick, it's an import and export tax on goods sold across the border. All right, that cost typically gets dropped down to the consumer. And the U.S. represents about 40% of Canada's GDP. It's even higher for Mexico. So, they're talking about things like unemployment could actually double in Canada. That is a potential possibility. So, Canada and Mexico's borders, this is the idea of why these tariffs went into effect, because you got drugs like fentanyl that are coming across the border, more so in Mexico than Canada. But they're talking about something like 42, 43 pounds came through last year. And while that doesn't sound like a lot, the fact that, 2 milligrams is a lethal dose, that's a lot of doses of fentanyl. You also got tariffs that have been crossing the border because of the policy changes that have happened in Canada. And now, and this was just last night, South Africa's on the watch list because of the land grabs that are happening over there. And of course, Europe is on the watch list for alleged past trade policies. So let's talk about 2018. So when Trump was in office in 2018, first it was China. We're going to tariff China. And they were tariffing China in just a couple of areas. Aluminum, solar, but then later on Mexico and Canada were added. Now in 2018, the tariff headlines drove short-term market sell-offs, but the dips were ultimately bought. And a major Q4 28 downturn was tied more to global growth concerns and not so much the tariffs. All right. So I want you to keep that in mind, that when we go back and we look for patterns, and it's hard to look for patterns in tariffs because if you look in the last 10 years, and I like to look at the last 10 years of data, I look at tariffs and I look at the fact that these tariffs were are really, there's only one other time that I've seen in the last 10 years, and it was geared toward Trump. So when I take a look at the stocks that were the big winners in 2018, there were 7, right? You got Fortinet, that was a 93% jump. AMD was up 85%. Netflix was up 40%. Twilio, that was a 250% gain. OKTA rose by 150%. Dexcom was up 108%. Chipotle Mexican Grill rounded out those top 7, was up 46%. Now, what has changed between 2018 and 2025? Well, we know that we are going to see by midnight tonight a 25% tariff on Canada and Mexico, 10% on China. The big difference is these are blanket tariffs. They're not segmented into specific commodities, although if the tax on Canada happens, it's only going to be 10% on oil and energy. Still, 25% on everything else. And here's the big change. In 2018, there was an exemption for anything that was $800 or less in price. That's off the table. It's everything this time. And so that could cut in if it's around a while, it could cut pretty deep. But unlike 2018, the Fed is actually expected to ease later this year, because if you remember in 2018, rates actually went up. So there you go. The details look exactly like we talked about there. So, couple of things. 10-year bonds. So Trump wants to see the 10-year bond rates drop. He wants them at or below 2%. If you see that little green splotch in the 10-year bond, you can see that was during 2018. We didn't see any big, even though rates went up in 2018, we didn't see a huge climb in interest rates for the 10-year bond. But boy, did they climb coming out of 2020 and 2021. And of course, we saw bond rates, the 10-year was up around 5.6% or so coming into 2022. Then the rates got hiked and we saw the 10-year bond drop. Although it's still pretty high, Trump would like to see that down below 2%. The other thing I want to point out is that if you look at market seasonality for February, it's a mixed bag, folks. I mean, you take a look at, this is going back into the years 2014, 2015. These are the teens. And you can see in February, it was kind of a mixed bag. You get to COVID, 2020, we were down 8.41% for February. Now, that's something that, that was where we ran outside of the normal range. But since then, we're back to that mixed bag again. Overall, the averages were about 0.53% to the upside. Not the best month when you look at February, right? Positive, negative, it's about a 55% win rate there. So when you look at February seasonality on the overall markets, it's really like flipping a coin. What I want to do is I want to take a look at what happened in 2018. And I want to compare those 7 stocks to what we have right now. So I took those 7 stocks in 2018, the Fortinet, AMD, Netflix, Twilio, OKTA, Dexcom, and Chipotle. And I ran them forward to 2025. And I looked at what's been going on the last quarter and the last 52 weeks. And they stack up like this. Fortinet is at the top of the list. Now, what we did was we took a look at Fortinet and we said, which of these stocks are sitting as close to their yearly highs as possible? And Fortinet's up there literally just coming off of the year-to-date highs. Twilio's not far behind at 98%. All right, when I'm looking over here at the far right-hand side. And then you've got Netflix at 98%. Then there's a big dive. All of a sudden, OKTA is somewhere in the middle of its 1-year range. Chipotle below the 50% mark. Dexcom is at 29%. That means it's just like 30% off the bottom of the range. And you look at AMD, it's sitting there right at the bottom of the range. And I was looking at some of the notes on here, and there's some uncertainty right now that's going on around the chip sector. And so, you look at something like an AMD, and it could suffer even more from the chip sector. But then you look at a stock like Intel, which could benefit from it. But I think it's too soon to talk about the chip sector. So I look at this and I think about, when I'm looking at this list, I'm thinking about Fortinet, I'm thinking about Netflix, and I got to go to Fortinet, which is the very top one. So when I look at stocks that I think are going to benefit in the area of the tariff, and I see Fortinet here, and I see cybersecurity up near the top. This was Fortinet in 2018, and I'm not talking about over here. I'm talking about when the tariffs began, and this stock was trading down below 10, and all of a sudden was up around the 18 area, pulled back to around 13, and ended up the year around 15. That was a big move, right? That was a big move for Fortinet back in 2018. Fast forward to today, and here's what you got. You got an uptrend in Fortinet. Coming out of the election, this stock was trading below 80. It's hitting 100 right now. It had pre-market opening around 98. That's not so bad, all right? That's not so bad when you look at what the overall market's doing and what stocks in this sector are doing. FTNT is definitely on my list to watch, right? Here's another one. Now, CrowdStrike is also in this space too. CrowdStrike is even a stronger stock than Fortinet. Why wasn't CrowdStrike on the list back in 2018? I'll tell you why. Because it wasn't a stock until after 2018. So we didn't have the data to go back and look at this one to really get an idea of what it was likely to do. But it correlates very, very well with Fortinet. So that's why CrowdStrike also makes my list of stocks to buy in an extended tariff. So, are the tariffs here to stay, or are they going to go away? If they stay, it's going to be a money grab. And Trump's looking at a money grab here for future tax cuts for Americans. So, if they end up going, if there's a deal to be made, then it's an agreement that I believe is going to push the dollar to rotate back down, because we got strong dollars coming into the tariff right now. That would create a lower dollar, and I also think it would create a potentially higher market, because lower dollars arbitrarily raise prices on what those dollars could buy. Last thing I'm going to mention is volatility could reign for the short term, but I also believe a longer term bull is in the run for stocks and commodities.